Today is October 31st, 2011, Monday on Halloween Day. I think a lot of people were looking at the metals today, and there was a good week last week. There was a large gain, especially in silver, very high gains for 1 week. They're looking at the metals that went down today, and I think they could see the dollar index went up, and that's related many times to the metals prices. Not always. Sometimes the dollar index goes up and the metals go up, and it follow the same direction, or they follow the same direction down, but more often they go in opposite directions. But why did the dollar index go up today? It was because intervention in the Japanese yen. You can see the Japanese yen has been hitting new highs against the other major currencies, and it hit a new high after a post-World War II high against the major currencies, and the Japanese bank decided to intervene and weaken the yen. So again, per this article, another article, this is a 1-hour chart, the Japanese bank intervened and weakened the yen. Yen plunges big time after Japan intervenes in the market. So that is why the dollar index went up, and we can see the dollar index went up 87 cents as of this time, and this is 11:46 Eastern Standard Time on October 31st. But that put pressure on the metals. That took some wind out of the sails, and it was moving upward. But one thing I do find interesting is that the crude oil did not take as nearly as much of a hit. Now I possibly could, because I'm kind of expecting it maybe to pull back a little bit more because it had such a big gain. But kind of curious that Dow Jones and other markets are down, and yet the crude oil is not that down. Especially when you're considering the U.S. dollar index is actually has moved more percentage-wise than the crude oil has moved percentage-wise down. I'm a little bit curious about something here, and this could be related to oil prices big time. If there's an attack on Iran. One thing I was always wondering too, recently they swapped this one Israeli soldier for 1,027 Palestinian convicts, and I thought, why did they swap one guy for over 1,000? But it says it can be interpreted as an effort to clear the deck before possibly undertaking an attack on Iran's nuclear facilities. I don't know, that's conjecture, that's speculation. But this article also goes on. It says, until recently, Mr. Netanyahu had faced opposition for attacking Iran from the Army Chief of Staff and the Mossad intelligence officer. But both of them have retired earlier this year and have been replaced by men believed to hold a different view on Iran. Well, I do know this speculation's been going on a long time. I know the Israelis have the bunker busters now, and they're saying the window of opportunity is going to close very soon. They have this fear that Iran's going to have a nuclear weapon. This is all Mr. Netanyahu. I'm not agreeing with or anything like that. I think if Iran wanted a nuclear weapon, I think I could just go buy them one from Russia, probably, for all I know, or one of the states out there. I'm sure they got an underground that sells nuclear weapons, despite what most people think. We don't know who the heck's got nuclear weapons. I don't think they'd have to bother going along with this program here. That's just my personal view on that. But if this does occur, and this is an article leaning towards an attack on Iran by the Israelis, and maybe dragging the United States in after it, it makes me kind of wonder why these oil prices are going up recently, because fundamentally they don't seem like they should be that much, to making that much of a move in oil, unless some people are thinking that there's going to be more unrest in the Middle East, or maybe a major war. But there's one other thing too. If you're looking at basic fundamentals, more and more oil is much more difficult to get at. There's heavy oil, extra heavy oil, and there's the tar sands, oil sands. In Canada, I read, I think it was over a year ago, that they need $70 a barrel just to mine the oil from the tar sands, because it's much more energy intensive. It's a mining operation. It requires a lot of oil just to get the oil, and it requires a large amount of water too. But I want to also relate something, because I think people aren't too interested in the oil. They're looking at the metals, but if oil does go up a lot, what that's going to happen is it's going to cause the mining operations of gold and silver, platinum and palladium to be much more expensive because they are energy intensive operations. So oil is related to the mining, and they're just not going to get this stuff out of the ground. So if you're talking like there's a shortage now, well, I guess you can also say that could be, I'm not sure if that would be bullish for mining stocks or not. I personally think the mining stocks, if it's a well-run mine, they're going to go up a lot too. But what would that do to the metals? It would cause the price of the metals to go up much higher because it's just going to cost that much more to mine them because they are an energy intensive manufacturing to actually get at the product. It's very energy intensive. Now, another thing about, we see the relationship between the US dollar and the metals. I mean, like, I know they can move in the same direction. They could both go up, they could both go down, but usually it's more often than not an inverse relationship. But one thing that could bring the US dollar down is actually, it could be a surprise that the euro could survive and strengthen over the long term. I know, like, 3 years ago, the euro was the thing to have, right? I mean, people were scared of the dollar then. There was an attack on the euro in early 2000, I think it was 2010, and I think in June it went up to like 80 index on a dollar, Unexpected things happen. I don't want to get into why that happened or who did it, what hedge funds or whatever, but, a lot of times it's reverse psychology. Something like Mark Farber says, the euro does look bad, but there's a proposal out there that there'll be a Eurobond, and it could be. Germany hates it because it's going to probably bring the cost of money up for them. Like, I mean, they're doing well. They don't need this Eurobond. They don't need the euro. Most Germans don't want the euro. Even Merkel doesn't want Angela Merkel doesn't even want the Eurobond. George Soros is proposing this. He's one of the people proposing. I mean, I don't want to say he's the only one, obviously not. But if they did this would be direct competition to the U.S. bonds. And since China is a bigger trading partner with European Union by far than the United States, I would think they would buy the European bonds over the U.S. bonds very easily. And I mean, we're not going to be able. I mean, it could be other buyers too of European bonds. It's direct competition with U.S. bonds. So this could be very, very bad for the U.S. dollar. I don't know if it's going to go through, but it looks like it's probably the only real solution that's going to work in the long term. Maybe Greece will exit the European Union, but if they're going to have a euro, probably this is the only way it's going to hold together. So what does that mean? That means that the dollar index could possibly, it would be in competition with the euro. The euro might strengthen. Who knows? I mean, it could be the opposite what people are thinking. If they can agree upon a euro bond, that would be bad news for the U.S. dollar. So, I mean, it goes the exact opposite what people are thinking right now. I don't know this for a fact. I'm not saying I do. But again, that could be extremely bullish for the metals in terms of pricing in dollars. So, you got to look at a lot of different angles. And the other thing is, like I said, I'm repeating myself, but crude oil is very much figured into the pricing of metals because metals is an extremely energy intensive operation. It involves a lot of heavy equipment. The mining is, I mean, they're going through tons of ore. They got, they're running trucks, they're digging up things, they're going through tons of ore, they're transporting things, they're sifting things down, it's being shipped to refineries, it's got different stages it's going through. It's an extremely intensive operation for as far as energy goes. So if oil goes up, it's going to cost them a lot more to get this stuff. So it's not going to just be speculators. It's going to be like, you want it? We're not going to get it out of the ground if we can't make money on it. So the price will go up in that respect too.